Today, Robinhood reports declining crypto revenue in the first quarter. Market maker Jane Street is backing away from its crypto business. And Andrew Durgee of Republic Crypto, who testified yesterday in front of Congress, breaks down how the joint hearing went. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are back in the red this morning, with Bitcoin retreating to the $27,000 level by noon Eastern. Ether also down and trading just above the $1,800 level. Solana, meanwhile, fell to $20. Okay, let's talk about the top stories. First, Robinhood dropped first quarter earnings last night, and the company disclosed shrinking crypto revenue. In total, crypto revenues fell nearly 30%, from $54 million at the end of 2022 to $38 million at the end of March. At the same time, though, the amount of users crypto in custody jumped from 8.4 million at the end of last year to 11.4 million at the end of last quarter. Overall, the company boosted revenue nearly 50% from a year earlier. Separately, Robinhood said this morning that it'll be launching 24-hour stock trading for some popular stocks and funds. Its shares rose following the announcement. Next, the IRS is seeking billions of dollars from FTX. In bankruptcy court documents filed at the end of April, the IRS made a total of 45 claims against FTX's business, including FTX US, LedgerX, and others. All told, the agency says it's entitled to $43.8 billion, including $20 billion from Alameda Research. We reached out to the IRS. A spokesperson said federal law prevents it from confirming or denying any correspondence with the agency. Back in January, bankruptcy attorneys said FTX had recovered $5 billion worth of liquid assets. That figure has increased by at least $800 million since then. Finally, market makers Jane Street and Jump Trading are taking a step back from crypto trading. A person familiar with the situation tells Crypto World that Jane Street is rethinking that business but will continue to make markets. Jane Street declined to comment. Bloomberg was the first to report on the pullback amid a regulatory crackdown on the industry here in the U.S. Jump didn't get back to us right away, but Bloomberg reported that it too plans to continue making markets and not abandon crypto entirely. Citing two people familiar with the situation, it reported that Jump's crypto trading unit is pulling back from U.S. markets, but still plans to expand internationally. All right, on to our main story. Congress held a joint hearing on crypto regulation yesterday. It was the first of several planned to try and hammer out new legislation. Well, today, Crypto World's Talia Kaplan spoke with one of the six witnesses, Andrew Durgee of Republic Crypto, on what was achieved at that hearing. Take a listen.
You testified at yesterday's hearing titled The Future of Digital Assets, Measuring the Regulatory Gaps in the Digital Asset Markets. Now, in that hearing, lawmakers stressed the need for a workable framework for effective crypto regulation and focused on figuring out ways to harness innovation while offering consumer protections. What do you think was accomplished yesterday, and do you think the U.S. is now one step closer to achieving that workable framework?
Yeah, I think yesterday's hearing was actually a really great step forward. What a lot of people don't realize, yesterday was pretty historical. It was a dual committee hearing. And that's something that is very, very rare up on the Hill. And that is that dual committee was between both the subcommittees that sit within the Agriculture Committee and subcommittees that sit within the Financial Services Committee. And I think what that shows us is the U.S. recognizes that multiple areas within the government need to work together and collaborate in order to find a solution forward. As we look at other jurisdictions that are now looking to roll out or already have rolled out large holistic frameworks for crypto regulation, the U.S. cannot wait, really cannot wait any longer. So there's now a lot of pressure that's being applied even beyond the regulators and now to the legislators because the regulators have not appropriately addressed these issues.
During your opening statement, you argued that the current system is not working as intended. You also noted that we're in the early stages of this technology and that it usually takes 25 to 30 years for people to adopt a new data transfer technology. You brought up radio, TV, email, and the internet as examples. You said that at this stage, 13 years after Bitcoin was created, the U.S. is starting to talk about standardization and stress that there's a responsibility to create an environment upon which to build the next world on. Can you elaborate on this, and why did you think these points were important to bring up in your opening statement?
Yeah, so I think often in these hearings, and if you see some of the previous hearings, we spend a lot of time talking on the financial aspects of the technology and kind of the speculative aspects of the technology, but that's really a very small piece of it. And I tried to reiterate to the committee a number of times throughout the hearing that this is something much larger than that. And so I did use the example of data transfer, and we look at TV, radio and TV and email, et cetera. We are still in the infrastructure layer of this. We're building the infrastructure for this technology to work. Everyone likes to talk about the application layer because that tends to be a lot of the fun stuff, and some of that stuff is a little bit more like tangible and feels a little bit more like where we are in the Web 2 world. The reality is things like regulatory frameworks, things like custody, storage, tax reporting, all these other pieces still need to be put together in order so that we can actually build applications. So the example that I love to give is that every 13-year-old currently in the United States or in the world has only existed in a world where Bitcoins existed. And 3 years from now, every 16-year-old will have only existed in a world where Bitcoins existed. 16 is a really important age because that's usually when people determine that they want to be a developer, right? They are the adoption layer. It's our job to build the infrastructure so that they can build the adoption components. And I wanted to make sure that wasn't lost on everyone, in particular, as a lot of times when we build regulatory frameworks out, it's not necessarily the most impactful to that exact moment, but much more impactful to those down the line.
How does Republic Crypto currently operate without a clear regulatory framework in the U.S.?
Well, Republic Crypto, and all of Republic for that matter, is built on 1930 securities law. We did everything the hard way. There was a fork in the road where we could have gone the offshore, unregulated FTX Bahamas route, and we went the opposite. We were entirely onshore, entirely U.S. regulated, very expensive, very difficult route because we knew that was the only long-term viable path forward, right? So we've been audited dozens of times by both formally and informally by the SEC and FINRA, work very, very closely with the regulators because we did go that fully compliant direction. And as we look at potential regulatory changes that may make things a little bit more favorable, or at least have more clarity and understanding for the digital asset space, and Republic is kind of at the forefront of that change.
Now, you touched on this, but 3 weeks ago, EU lawmakers approved the world's first comprehensive framework for crypto regulation. During the hearing yesterday, you were asked what lessons can be taken from MiCA as the U.S. crafts its own framework. In response, you argued that it would be a misstep to only look at the EU's framework and pointed to other jurisdictions like Dubai and Singapore for a much more holistic view of how the world is approaching the asset class, while the U.S., quote, waits in the wings. Do you think it's too late for the U.S. to catch up to these countries?
No, I don't think it's too late. And I think most of the countries were actually waiting for the U.S. They wanted the U.S. to kind of make the decision, and they couldn't fall under. The reason why I said it'd be a misstep to only identify MiCA is MiCA is while it is the most holistic approach to crypto regulation for a significant jurisdiction, which is EU, it still has a number of pieces that it's missing. Right. And keep in mind that MiCA does not go live until 2024. So there's going to be more pieces that they inevitably add to it as that approaches. So it would be a misstep to only look at one jurisdiction. If you look at it more comprehensively globally, and you look at whether that's a AAA rated financial institution like Singapore and MAS, which is the governing body there, or you're looking at Dubai and what they're doing with VARA, and more importantly, I think the one to keep a very close eye on is what the ultimate regulatory frameworks that roll out at the UK will be, because I think that will be particularly robust and particularly comprehensive as compared to the others. So we're at a place now that we are behind, right? So we have to figure out how we want to go forward. Well, when you're trying to figure out how you're going to go forward in a global environment, you need to understand where everyone else is. So you can't ignore all the other frameworks and only push forward your own now that there's some substantiated frameworks that are already in place.
Another area of focus yesterday, examining the SEC and CFTC's responsibilities for regulating the space. What is your take on that?
Yeah, I mean, I think that's the reason that was a dual hearing, right, is because the Agriculture Committee kind of oversees the CFTC, right? So that was kind of bringing the CFTC to the table and understanding which of the regulatory bodies is going to be primarily responsible for digital assets. The common topic is will it be an SRO that's put together ultimately? That's a collaboration to regulate and manage these assets. I think this topic still has a lot to go. We have, if you look at the SEC and how we look at digital assets from the SEC, pretty much everything falls under the SEC except for Bitcoin and Ethereum. Right. And a lot of the argument that you hear, especially yesterday, is, well, Bitcoin and Ethereum represents north of 70% of the entire digital asset space. So, by default, the CFTC that regulates commodities, which is what Bitcoin and Ethereum sit at, regulates already the vast majority of the industry, right, by market cap. But the reality is, again, now in that conversation, we're still looking just at the financial asset. And this is why I continually try to bring people back. Like, yes, we can look at it through the financial lens, but what you really need to be looking at it through is through a technical innovation lens, because there's a lot of pieces that are built within this industry that aren't necessarily financial or speculative in nature. So what I want to try to avoid, or at least make sure that everyone stays aware of, it's whatever regulatory frameworks that we roll out, we need to make sure that have a clear understanding that those are going to impact things beyond just financial instruments, beyond just digital financial assets.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.